How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data recorded January 8, 2019. So let's take a look at what we have with gold. Now, a couple weeks more data has been released. Last release had data up until here, December 24th actually. And what we saw with gold was that the institutions were increasing their longs, and we can see that all throughout here, okay, up into about 208,000. And we were expecting that. I mean, I had mentioned this back when price was over here, that eventually they'd start adding longs to get price to come up here back into the monthly area of supply. Okay, now that price is back up here, what are we seeing? Well, let's take a look at the last 2 weeks data that has been released to us. What we see is they slightly increased from 208 to 210, and then a drop from 210 to 199, and that came as price was officially contacting the monthly area of supply. So price hits the supply zone, and now they start to close off some of those long positions quite aggressively too. If you take a look, a drop from 210,000 to 199,000 is quite aggressive. So they hit supply, they start taking profits on longs, and now what do we see happening here with the shorts? Take a look, starting to build up shorts again from 86,000 to 100,000. So this can continue to get more bearish, because we can see we were extremely bearish here, becoming more neutral, and we can start to see become more bearish again as price plays out here throughout these weeks. So we're at this candle right now in terms of where the data sits right here with what's been released. So we still have 1, 2, 3, 4 more weeks of data until we get caught up to where we are right now. Okay, but in 1, 2, 3, and 2 weeks time, there's going to be a couple more candles here. So to be completely caught up, we're looking at least 3 weeks to pass by. Okay, and that's fine, because what we're starting to see here is evidence that the longs were added just to cause price to move up, and then they would start to close off those longs and build a stronger short position, a bigger short position, in preparation for a move downwards like this. Okay, we've been expecting this for quite some time, and it looks like this is the very beginning stages of that. So yeah, everything's looking good according to plan. Now let's take a look at oil and see what we see here. Price was down here reacting to the upside from a weekly area of demand after removing a monthly area of demand. And so we see long positions drop from 502 to 498,000. And now we're starting to see an accumulation of shorts. Now you remember what I was mentioning when price was up here. Okay? I said the main focus all throughout here will be profit taking on long positions. And you can see that since price was up here, June, July, August, you have numbers of 762,000 down to just under 500,000 now. So that's some massive profit taking on long positions, right? At the same time, we could see that shorts were very cooled off. Why was that? Because they didn't have enough time to accumulate a massive short position up here. They needed to focus on taking profits on those longs. And now, as price is down here and starting to move upwards, we're starting to see them build that short position. Now remember, what happens when short positions are filled by the institutions? Price drops. What happens when long positions are closed? Remember, if you're closing longs, it causes price to drop, right? Why would that happen? Because when you're closing longs, you need a lot of shorts to come in, right? You need a lot of sell orders to come in, which causes this to happen. And so if you're adding shorts as well, it also causes that to happen. So we're starting to see a small decline here, and we could see a push all the way down here to the that demand zone here on the weekly chart before seeing a bigger push. Bottom line is, what we're seeing here is the telltale signs of an accumulation of a short position to eventually push price even lower. That is what I am seeing. Okay? So let's take a look at the dollar. US dollar up here testing the weekly area of demand for the second time, and we can see that they are starting to aggressively increase their long positions from 41,000 to 49,000. That's pretty aggressive. At the same time, they slightly increased their shorts. I say slightly, but when you take a look at the ratios, that's pretty significant increase, enough to cause long exposure to drop from 82% down to 76%. But if you take a look here at the net positions, there's a clear bias here. Okay, aggressively long up until November. Okay, and November is here. Less aggressively long. Okay, and as this was taking place, you could see longs at 48, shorts at 8, now jumping shorts up to 15 and back up to 49s. So what is taking place during this phase? Okay, well, at least up until this area here to here, we're seeing the net position slightly drop. But I'm not too concerned about that, because as we've discussed in the EURUSD report, what's clearly taking place here is a lot of strong evidence that price is going to continue to the upside. All right, very aggressive here, starting to become even more aggressive, very cooled off, not seeing anything different than that. Still room for increase in the positions, and overall net positions have been bullish for quite some time. So that means to me, what I'm seeing is likely we're going to see price move up from here. Now we take a look at the Aussie. So the Aussie has a higher time frame area of supply and control, which is putting pressure on price to the downside. And the data represents this candle reacting upwards after a massive spike to the downside. And so if we take a look at the long positions, we can see that they decreased them from 27 down to 22. But take a look here. Big increase in shorts from 54 to 60. All right. Overall, you take a look here, they were very aggressive with their shorts, becoming less so, but still sentiment remains bearish. And now we're seeing a reaction from the descending trend line. And it's likely what we're going to see in the coming weeks' data is a push to accumulate more of those shorts again. They accumulated shorts, took profits at lows, up again, and a reaccumulation of shorts is likely what's going to be present on the coming weeks' data. Alright, so now we take a look at the USCAD. I really like this chart. I really like the data and what the data is telling us here, because we've had a very clear bias with the USCAD for a long time now. And so now when we take a look here, we're starting to see strong evidence to support what the thesis has been all along on the USCAD. Now, we've already started to position ourselves long on this pair, with the anticipation of a move like this to the upside. And so we've always wanted to have the institutions back up what we believed was going to take place, and now we're starting to see that. For quite some time, sentiment was somewhat neutral, and we were expecting it to be, because price was declining into higher time frame areas of demand. But now over the last few weeks, take a look here. Look at this. Look at these numbers here, increasing very aggressively. Right now, they're very aggressive with their longs, and they're very cooled off with their shorts. And the big switch happened pretty much after contract expiration. So that tells us they use contract expiration to refocus and reposition themselves, likely for what they were believing was about to take place. Now we take a look at the percentage long, and we have 82%, very aggressive. And this, once again, this is going very well alongside the thesis that we had on the USCAD, already nicely positioned, and will be increasing our positions as price makes the move to the upside. So everything looking really great for this chart and this pair. Then we go over to the US Swiss franc. Now price is reacting exactly as we were expecting as well on this one. And so if we take a look at the data, what we see is that as price is declining like this, we see longs decreasing. So profit taking on longs, which is what we were expecting. Remember, I did a special report just before Christmas in the EURUSD report detailing what the institutions were likely to do when they were at these highs, and it has played out exactly as the report was breaking it down. And so now we see the profit taking on long positions and shorts very cooled off. So they've been focusing on just taking profits on longs, not really doing anything with shorts. And now price is reacting. What we're likely going to see in the positions is the longs start to accumulate back up to these levels that we had back here last summer. Okay, which is down here, and we see what took place. If they start to accumulate, we're going to likely see a move like this. So again, just like the USCAD, we've already started to position ourselves with this pair. The portfolio is looking really good with the positions, and we'll be adding as price plays out in our favor. Now we take a look at the Euro US dollar. This one's a little bit more difficult to read, but again, just like with the dollar, there's a lot of strong evidence to lead us to believe that there's going to be a push higher. And with this one, there's strong evidence to lead us to believe that we're going to get that drop. We have a weekly area of supply in play right now, so weekly force is to the downside. And if you take a look here, sentiment went from bullish to back and forth to a pretty consistent bearish, okay? And if you look at positions, you can see that they're both pretty much aggressive. Overall positioning is pretty aggressive as well. And sentiment pretty much neutral and has been for quite some time. But here's the key information right here. This is what we should be focused on. Bottom line is net positions is bearish, and we're likely going to see a continuation of that move to the downside. Now we take a look at the pound. So remember, this data represents as price was down here. We know eventually we got a rally to the upside. But as price was down here, what we were seeing was longs were very cooled off and shorts were somewhat aggressive. Not as aggressive as when price was down here, because we can see in the summer they were very aggressive with their shorts, which they accumulated all throughout here. They took profits, and they also closed off their long positions all throughout here. Okay, price eventually moved lower, moving back up. What we could see is a reaccumulation of shorts causing price to move even further down, because likely this is going to move alongside the rest of the markets. So expecting a move to the downside. Very tricky, this chart, because we have higher time frame forces pushing up, higher time frame forces pushing down, so we're kind of stuck in between multiple forces. So likely that what's going to dictate the action on this chart is what is taking place on the other markets. Now we have the US dollar, Japanese yen, and so as price was dropping and causing this massive spike lower, we saw this massive spike. We were all wondering what was taking place during this phase. And you can see exactly what caused it. A big closure of long positions and a big increase in short positions by the institutions. Okay? So this was just recently right after the holidays, and all of a sudden when liquidity was very low, we saw this massive spike. But we knew that it's all due to the institutions. Why was that? Well, the main reason is because leading into the holidays, I was saying that what was taking place here and what we could see on the charts was leading me to believe that there was going to be some massive profit taking on longs, and we were going to see a drop in price. And that's exactly what took place. Okay, and so whatever direction is going to be expected based on the analysis of the institutional positions, whenever there's spikes, it's always in the same direction of what the institutions were pushing price. Okay, so if the institutions are pushing price down by the maneuvers that they're making with their positions, then if there's any massive spikes that are going to take place, they're going to be to the downside. And it's always like that. I mean, in all the years that I've been trading and tracking the institutional positions and their support, supply and demand zones, I've always seen it play out like that. And so over the coming weeks data, we're probably going to start seeing the longs start to increase again, and we're already starting to see that push to the upside on this pair. So we'll see in the coming weeks what takes place. As for the Kiwi, higher time frame forces pushing lower. Price was reacting from a weekly area of demand, and as it was doing that, longs were closed and shorts doing nothing. So we're not really getting any sense of what's taking place here. What I can tell you by taking a look at the bigger picture is that institutions were accumulating massive short positions as price dropped. Okay, longs were very cooled off. Now we got that push to the upside, responding from some supply. Monthly 20 EMA, we're starting to see those forces come back into play now. What could potentially be taking place now in the coming weeks is a reaccumulation of short positions for a bigger push to the downside like that. Okay, ladies and gentlemen, that's your CFTC report for January 8, 2019. Hope you enjoyed it. If you have any questions, shoot me an email. You can reach me at www.whiteoakfx.com. Thanks, and we'll see you again. Take care.